on Sunday, so we have nothing special. So on Monday.
Sorry, nothing on China. China.
No, or we can perhaps monitor the trade balance, of course, and the US dollar denominated trade balance, but they are both neutral as usual with the Chinese news release.
Okay, done. And next one.
Okay,
Monday.
next one on Monday. So we will have. So it is a bank holiday in Canada and in USA. I don't know the reason why. So expect a quiet US session. Thanksgiving. Oh, Thanksgiving in Canada and not in the USA, I suppose. Columbus Day. Okay, Columbus Day. So let's see the speech by Cunliffe. Due to speak about monetary policy at the Society of Professional Economists annual conference in London. No, let's forget. It's true that we are approaching quickly the end of the year. So we have to monitor the OZ monetary policy meeting minutes.
Yep.
Then we have Corona speaking. Yeah. Due to speak at the branch managers meeting in Tokyo. No, not important for me. And monitor the Chinese CPI year over year and neutral as usual.
PPI?
No, not the PPI. The PPI is less important for China, at least for the moment. Tuesday.
Okay. I'll scroll down.
On Tuesday, yeah.
Incidentally, in case anybody's really interested, there's 98 news items this week.
There was what, Chris?
98 news items.
Yeah, but many of them are not important. So.
Yep.
Then we have Carne speaking.
Where's he? Okay.
At 4:30. Due to testify on the financial stability report before the Treasury Select Committee. Yeah, let's monitor that. We can have perhaps some volatility with that testifying. I will also monitor the average earnings index 3 months over year and neutral. Then we have the Euro, the 2ZU, the German ZU economic sentiment and the Euro ZU economic sentiment, both major and both bearish.
Okay, hang on, I'll just do this. Oops. Okay.
Then we have to monitor the 10-year bond auction, the pound. Remind me something about the bond auction, Chris, because in the context it may be, global context, it may be important.
Yeah, I think I'm going to remember something. Bond auction.
Then
okay.
We have Vlieg speaking.
Right.
So, due to speak about the low interest rate environment and the implications for monetary policy in London. This may be interesting. I will monitor that, and if I have the time, if it is streamed live, I will follow that speech.
Okay, and so live streaming, if anybody's into it. League, where we go, here, latest release. New chapter, I don't want to do this, but okay.
If it is streamed, you will have the link. It will be clear. You will have the link to follow on YouTube. Yeah.
Dun, dun, dun.
And if there is an article with a summary of the speech, I invite you to read that.
Okay, let's come back over here. One.
Because we have to pay attention to these negative interest rates, because I have some idea about that. I was thinking all these days. So then we will have the Kiwi let's see where we are. Yeah, the Kiwi GDP price index, major higher time frame, but to be defined. Then we have George speaking. Due to speak about U.S. payment system at an event hosted by the Federal Reserve Bank of Chicago. Oh, no, not important for the moment. Payment system can become important in the future. There has been an important working paper released a few months ago by the IMF, which is really interesting, 89 pages, but really, really interesting to read. Then we have the US dollar federal budget balance, so I will monitor that, and bullish. Then we have Bullard speaking. Due to deliver a speech titled The Federal Reserve Monetary Policy Option. No, let's forget. Then we have the Kiwi CPI quarter over quarter, major higher time frames and neutral. Then that's it for, I don't see the date. Chris, can you move a bit to the right side, the calendar, Chris, please? Ah, okay, that was for Tuesday. On Wednesday, we have the pound. Let's see, I will monitor the pound CPI year over year in the Brexit context, so, and the bias will be neutral. 0.1% is not enough, so neutral.
Just on the CPI, last couple of months ago, it made it spike 40 pips. So it's worthwhile monitoring, being aware of it. In fact, I'll be quite careful about it. Anyway, moving on.
Then we have the pound PPI input month over month, major and bullish. We have the core CPI year over year, so major higher time frame. No, sorry, not major, a monitor, because it is a year over year, so monitor and a bit bullish. And we have the PPI output month over month, so major and neutral.
Okay.
Then we have the euro trade balance, major higher time frames, pretty much neutral. Monitor, of course, the German 30-year bond auction. Then we have the CAD CPI month over month, major higher time frames and bearish.
Ah.
Yeah.
Finally got them together. Yep.
Yeah. Then we have the CAD core CPI month over month, major higher time frame to be defined.
It's more like it.
Then we have the US dollar core retail sales month over month, major and bullish. And we have the US dollar retail sales month over month, major and neutral. Then we have again Carney speaking and Ivan speaking, so a lot of talk. Yeah, this is strange. When we open this kind of icon, the page jumps. So due to speak at the International Monetary Fund event in Washington, no, not important.
Okay.
Then Evans, due to speak about current economic conditions and monetary policy at the Greater Area Development Council in Illinois, no, not important.
Okay, just in case. Sorry. Ralph. Okay, we'll come back to Ralph. Okay, sorry. I thought there might have been discussions on the news itself.
Yeah, then we have German Bundesbank President Weidmann speaking. So, yeah, let's see the content of the speech.
That's lucky.
Due to speak in New York. Okay, we'll speak in New York, but we don't know the content, so let's forget. The beige book, I will monitor the beige book.
Okay, done.
Yeah. Then we have Brainard speaking.
Okay.
So due to speak about development in digital currency and policy notifications at an event, so not important for the moment. We have the bell. Due to speak at a Chartered Financial Analyst Society, no, let's forget. Carney again. Harvard Kennedy School, no, let's forget. Then we have the two OZ employment change and unemployment rate, so major. For the employment change, it will be bearish. Bearish.
Down here. Okay.
Yeah, bearish. And the unemployment rate neutral.
So
and
just majors.
Yeah, major. Yeah, they are less important than the U.S. non-farm payroll, but they are important, so major. And that's it for Wednesday. So Thursday, we have the Swiss trade balance major higher time frame bullish.
Yep.
We have then the pound retail sales month-over-month major neutral. Monitor the Spanish 10-year bond auction. We have the CAD manufacturing sales month-over-month major to be defined. We have the US dollar Philly Fed manufacturing index major bearish.
Yep.
We have to monitor the natural gas storage and the crude oil inventories.
Yep.
Then we have Bowman, Evans and Williams speaking. So
okay.
All the team is speaking.
Right.
So, due to speak at a Fed Listens event hosted by the Federal Reserve Bank of Chicago, no, let's forget. Evans speaking. Due to speak at the Fed, Chicago. Wasn't Chicago the city of Al Capone? Williams.
Don't know, did you know him?
Due to speak at the Managed Fund Association Outlook Conference in New York, no, let's forget. I think it was. So perhaps these talks in Chicago is in is a tribute to Al Capone.
Yes. Okay. I'm sorry, buddy. I'll edit that piece out from you, Xavier.
I will monitor the Chinese GDP quarter over year, so and neutral.
Going off topic more than I do. Yep. Okay.
I have read an article today by someone known in France who is claiming that even the gangsters of the mafia are more honest than the banks. And so that's it for Thursday. And
okay.
so Friday.
So nothing for China at all.
No. All these news are way less important, at least for the moment. So for Friday, we have the euro current account, major higher time frames, and a bit bullish. We have again George speaking.
Didn't jump.
Due to speak at the Energy and the Economy Conference hosted by the Denver branch of the Federal Reserve Bank of Kansas City. No, not important. Then we have, where are we?
Down here.
Yeah. It may be interesting to monitor the IMF meetings. And then we have Clarida speaking. And so Saturday also, of course, with the IMF meeting. And so we have Clarida speaking.
So no magenta items this week.
So due to speak about the economic outlook and monetary policy at the Chartered Financial Analyst Fixed Income Management Conference in Boston, no, not important at all.
Thinking, how more boring can you get? Anyway. Okay, their parties must be real ravers. Okay, so what else did we have? Okay, we're done. Right. You can also visit. You started something, Eusebio. Loved why many people provide lots of welfare tax issues. Yep, so that's Capone. Thank you, Capone. Oscar spending is on fish. Okay. Craig has put a link in for negative interest rate topics. I'll copy the link and repaste it down here so that you can access it. Okay, so type that out if you're watching it, rather than trying to click on a link that won't work in a video. Started second pennies. CAD made for easy pips on Friday. Okay. Right. Hey Louise. Sorry, slowly going through this stuff. Hello to everybody I've not just said hello to yet. It's a whole piled in. Okay, Ralph would like a discussion on negative rates and IMF comments, and you said that I had to remind you about bond something.
Yeah.
Okay, go.
Okay, but you have first to make your usual comments about the news release, Chris, first.
Do I have
Let's
to?
complete
Okay.
the list.
Right, okay. So, any items that are marked with H4 plus, if you're trading H4 timeframes and above, the news that's coming out could impact you for these particular currencies. Anything that you're trading under that's marked with a major is likely to impact you as well. So whenever you're trading and these items come up, then don't place any orders 1 hour prior to the news coming up, and get out of it within half an hour of it because of the volatility that could be caused by it. And the volatility can chomp into your account, so we don't want that. You need to protect your account above everything. Otherwise, you've got nothing to trade with. For SAM and standard people with multiple units open, then you don't necessarily have to close everything down, but you can take some profit from your scale-ins. And the SAM people, you could go a bit closer because the SAM operates much faster than the standard or the primer. So it's up to you if you're feeling confident about things. Just be really careful though, it's still quite dangerous. Not so much I've noticed these days, because when the news has been coming out the last few months, it hasn't made that much of an impact. Like even the non-farm payroll isn't. Lucky if we get a movement out of it. But there can be surprises. So if there's news coming up on the US dollar, the euro, or the yen, I don't have one up here, then it doesn't matter what pair you're trading, treat it as if the news is coming out on that particular pair and follow those half-hour, 1 hour guidelines. If the news is coming up on a smaller currency, like for instance the CAD, and you're in the Aussie Kiwi, then you don't need to worry so much about it. Just be aware of what's going on and be prepared to take action really quick. But it's unlikely that the CAD will impact the Aussie Kiwi or something like that, or the Swiss or whatever. Or if you're in the euro dollar, it's unlikely to impact that. However, having said that, I did watch a news announcement come out on the Kiwi. It was a surprise, and it made all the pairs jump like 10 or 20 pips at that time. So there's no promises on this. And the pound sits in between, especially these days. So I've marked the pound with the care package because whatever news comes out on there can make it jump 40 and now 100 pips either direction at this moment. As it's getting closer and closer to the Brexit, things are getting more and more volatile with the pound. So be super careful with this. You saw this week how it moved something like 300, 400 pips on some of the pairs just in the 2 days. 250 pips on one of them, I think. Of course, it was while I was in bed, but hey, that's
Chris,
life. Yeah.
Excuse me, would you adjust your chat seat, please?
Like so, okay.
Thanks.
And thank you. Okay, right, so I've done my raving there. So the top 10 pairs are over here. The ranges, there's not been so many having big ranges saved at the end for the pound. But but let me see if I pull this over a bit. There's less pairs that have gone over our 750 pip range. So we've only got 7 official top 10s here. And for the ranges, if I just squeeze this in a wee bit, pull this down, you can see we started off the year with top of the range being $1,300, got up to $1,500, squeezed down to half that, around about 800, and been slowly trying to come back up. So to give you an idea on how the ranges have been moving, still pretty tight compared to a few years ago when this was the range was more like don't know what the range was. Yeah, I'm more been thinking about it in pips. So this pip range here is 140. A few years ago it was 600 pips a day. So the ranges are really tiny at the moment. It was way before we started doing this. But to give you an idea, so what I've done is, so these are the pairs to monitor for the week. I'll include these bottom 2 in just so that we get some euros. And I'll copy this off, put it over in the spreadsheet, and Eusebio can do some magic.
Yeah, you have to include the euro yen and the euro kiwi. That's good. Okay.
Yep. So, okay. So now we're going to match the pairs up with the news to pick up best pairs for a particular day, hopefully. So Sunday there's nothing, and on Monday we've got nothing as well, Eusebio. So.
Okay, so for Monday the choice will be easy. So the pound yen for the first pair, then the pound Swiss for the second pair, the pound US dollar for the third pair.
Okay.
Knowing that the pound US dollar during the US session may be more difficult to trade, so instead of the pound US dollar, we can perhaps consider the pound Kiwi and or pound Aussie.
Also or instead of?
No, instead of.
Okay. Let's see if I get this right. It'll be okay for the rest of it. Okay.
Pound Aussie or pound Kiwi. Pound Aussie or pound Kiwi.
Thanks. And righty. So I'll stretch this out so you can see it.
Yeah. On Tuesday.
It's come up. Okay. On Tuesday we've got nothing from Monday.
Okay.
So for those of you new to this, we look at things that have happened after 5 p.m. on Monday or after 5 p.m. the previous day. So there's 5 p.m. and there's been no major news items then. And then that look for major items for that particular day up to 5 p.m. So we've got going up to here. So nothing from Monday. And on Tuesday we have the euro.
Yeah.
Pound.
We have the pound as a major.
Oh, sorry. No, I lied.
Okay.
Monitor. And the Kiwi.
And the Kiwi. Okay, so the first pair will be the Euro Kiwi. Then we can take the Euro Kiwi or the Euro Aussie.
Sorry?
So
Pound
Euro Kiwi for the first pair. Then the pound Kiwi or pound Aussie.
It's better. Yep.
And then the Euro pound.
Okay, and same thing on Tuesday. So after 5 p.m. on Tuesday, we have a Kiwi.
So we will have the Kiwi, okay.
And for Tuesday, we have the pound.
The pound, and pound, okay.
Euro.
The euro, okay.
CAD.
The CAD, okay.
USD.
And the USD, okay.
The American USD dollar. And,
okay. And that's all.
No, it's still going. Hang on. Yes, that's it.
Okay. So we will have so the pound US dollar or the pound CAD. pound US dollar or pound CAD.
Yep.
Then we will have the pound Kiwi or pound Aussie.
Hey, Tariq. Yep.
And then we can take the euro pound.
Okay. Let's stretch this out so it fits. What was this first one you said, you?
I don't remember.
Like
the first one, the pound US dollar or the pound CAD.
I was just testing. Thanks. Okay. And so that was Wednesday. So the end of Wednesday we have Aussie.
So the Aussie, okay.
And for Thursday we have the Swiss.
We have the Swiss, okay.
The pound.
The pound, okay.
The CAD.
CAD, okay.
US dollar.
The US dollar, okay.
That's it.
That's it. Okay, so we will have let me see here. It's not so easy. So we will have the pound US dollar or the pound CAD. Then the pound Kiwi or pound Aussie. And then the pound Swiss.
Okay. And for Friday, we have hangers.
For Friday,
yeah. Thursday, we have nothing left over.
Okay.
And we've got the euro on Friday.
So the euro, okay. That's it? Okay, so we will have the euro pound.
Yep.
Then the euro yen or the euro kiwi. And then we can add, as usual, the pound Kiwi or pound Aussie. Ralph, for the US session, you can trade any of these pairs containing one American currency, so containing the US dollar or the CAD. So you have plenty of them. And if for some days you have no such pair, you can go down, downward into the top 10 pair list. And so you can consider, for example, the pound US dollar, the pound CAD. So they are the two you can consider.
Okay, and what else have we got? Volatile. Okay, thanks, Peter. Okay, so we're getting into Capone's. How come it's hard to say that word? Al Capone's drinking issues, courtesy of Ralph. Thank you. And okay, any questions or comments about this? And there is something I want to ask you, Sabio. How are you working these out? I tell you which pairs on a particular day. So what then do you do?
What I do, I have a matrix. So to define what are the pairs containing one or two currencies with news release, and then I choose those with the most events.
Okay, that's what you do, but how?
Yeah.
So
what do you mean by how?
Well, you're going pound, euro, euro.
Yeah, I have two-dimension matrix, and so in the first dimension I list the pairs you have there on your screen, so the pound yen, the pound Swiss, the pound US dollar, down to the euro kiwi. And then on an horizontal dimension I have each day of the week, so the Monday, Tuesday, Wednesday, Thursday, Friday. And for example, on the Monday or Wednesday we have news on the pound, so I check all the pound pairs. Okay. Oh, Yeah, for this is the example for the Wednesday. Then we have also a news on the US dollar. So I check everything which contains the US dollar. Then the CAD. Then
here we go. Yep.
Yeah. Then the Kiwi. Then the Euro.
Yep.
Yeah, and you can see directly the choice. So the first choice for Wednesday is pound US dollar or pound US CAD. Then we have the pound Aussie or pound Kiwi. Whenever we consider the pound Kiwi, we can always consider the pound Aussie. And then we have the Euro Kiwi.
Okay.
No, it was not the Euro. Yeah, the Euro pound. Euro pound has two check, Chris.
Oh.
Euro pound.
Oh, okay. Sorry.
Yeah. Then I take the Euro pound. We could have taken the Euro Kiwi, but I prefer the Euro pound. So.
Okay. So yeah, there's still a little bit of discretion figuring out which ones to actually pick.
Yeah, if I have to choose, so I choose in the order, the downward order of the list.
Sure.
So, for example, I can choose the Euro pound or the Euro Kiwi. The Euro pound being more volatile than the Euro Kiwi, I prefer the Euro pound.
Okay. And okay, thank you. I hope that helps with people. So if we disappear, you're able to do it for yourself, or you're lost on a desert island. And the thing that I wanted to ask you was, are there any items that are super important here that need to be plussed, like done in red this week?
No.
Okay, major plus type stuff. Okay, and Dan has answered Ralph, thank you. And cool. Okay, so I'll save this, and if there's any questions, just yell out, otherwise we'll move on. And okay, I'm done. Right. So we've done the NewsWatch.
Yeah, I had some comments to do about the NewsWatch, Chris, concerning the bond auction, and I have mentioned the working paper by the IMF. I have posted the document in your Skype, and so
okay.
Yeah, so it is named WP something. And so you can distribute it because it can be freely downloaded from the IMF site, provided you are able to find the link. So with these websites, it's always difficult to find the information. So this working paper is 89 pages long. So it may be really boring to read, but it contains very important information, I think. It seems that the IMF is promoting negative interest rates, and even deeper negative interest rates. Deeper, I mean down to -4%, believing that this can help to avoid important recessions or important catastrophes due to a potential financial or monetary crisis. So this is the first point. And they go deeper into their project. They also make some recommendations about banishing cash money. I don't believe this will happen, but they advise to progressively eliminate the cash money. And so they give a lot of procedure which can be implemented everywhere. So, for example, promoting the digital currency, putting interest rates on any cash payment, so banishing, making illegal some payment in cash, and so on, until the cash will completely disappear. So, that paper is a working paper, so this doesn't mean that the central banks and the different states will implement these advices, but when you consider these advices, so I consider this is really a scary situation. So Concerning the negative interest rate, yeah, other consider there are different opinions. So some are for negative interest, some are against negative interest. I have not said to stimulate the economy. I have said to prevent an important recession or an important crisis. Yeah, and of course with digital currency, with total digital currency, the banks will have a total control on people. That's clear, of course. So this is something we have to keep in mind in the next coming years, perhaps in the course of 10 years or 20 years. So, but it's an interesting document to read, difficult to read, and so boring to read, and sometimes you have to interpret what they are telling and to read between the lines. But really interesting. But I could speak about more than 1 hour about that document, but I leave you the task to read that document. And I wanted also to talk about the bonds auction, especially in USA. You know that for several days now, the Fed is putting money in the financial system, so with the repo transactions. I remind you that a repo is just the central bank giving money to a bank for 1 day against an interest rate, an intraday interest rate, and against, of course, collateral, and at the end of the day, they make the switch in the opposite order. So those who are adding up these repo are making a mistake, because every day they have to pay back the Fed. So many consider that these repo transactions, which will still last for several days during October and perhaps later, may be also a sign of an important financial or monetary problem. But we have to be attention about that. Because it depends what is the reason of these repos. One possibility is indeed, and there has been rumors about that. There is one bank or several banks having had some financial difficulties due to unexpected or undervaluated expenses. So if this is the case, so the central bank plays its role. And so this is not a sign of a difficulty or a crisis to come. A second possibility, which has been also rumored, is perhaps the banking system in USA wants, for any reason, to ostracize. Can I say that in English? Ostracized a specific bank. Yeah, a specific bank in USA. Which one? We don't know. If this is the case, so this is not a sign of a coming problem. So only for the bank which will be ostracized. Now there is a second possibility. If you observe the last Treasury bond auction in USA, so this auction has not been very good. Usually the bonds auction is covered 2 times, sometimes more, sometimes a little less, but around 2 times, which is huge. And this time it has been just covered 1 time. This means that the auction has not been good. And so this indicates that perhaps now the US government is in financial difficulty. And if this is indeed the case, this shows that now many governments, many countries will face similar problems. This means that their debt are becoming too much important, and this is a big concern. This can lead to major monetary problems, which is worse than a financial or economical problem. So, this is why the interest rates are pushed also below zero, with the aim to prevent or to try to prevent an important crisis. But there is also another indication of these negative interest rates, usually based on some economical theories like the Keynesian theory, even if we are in favor or against that kind of theory, this doesn't matter. So negative interest rates are not good for the economy. Because it may correspond to a destruction of money, a destruction of activities, and so on. But there is just one exception. There is one case when negative interest rate can be justified. It is when it is expected that we will face an important deflation phase in the future. And if this may happen, a lot of assets will see their prices decrease, and perhaps decrease importantly. For example, the real estates. For example, the stocks, the shares of corporate which are listed, for example, and so on and so on. And so we have to follow closely what will happen in several markets to try to understand progressively in the future what is the reason of all these points we are seeing now, all these negative points we are seeing now. So we may possibly face an important monetary problem, but we have to follow closely the element I have noted to have more confirmation so in the future. So, but anyway, this is not very, very positive. So. Yeah, Ralph, indeed.
Okay, and if you want a bit more information...
But you know, Robert, if you put your piggy bank under your mattress, but if the IMF, for example, succeed to convince countries to banish cash money, the money you have in your piggy bank will become useless. So, because paying cash will be banned, will be even illegal. So, and so, what is the solution? What is the solution? So,
cryptocurrency, Xavier. Cryptos.
No, cryptocurrencies are a scam, a pure scam. Yeah, spending. This is what they want to. They want us to spend our money. In fact, spending our money is one of the engines to restart the economy. Yeah, indeed.
Okay, so on our good reason to bring this up. On our NewsWatch page, there's some information down here on the US Fed and the repo.
But nothing changed, indeed.
Yep. Well, I don't know that many people have looked at it. So the first one is not available just yet, and the second link here goes a bit more into an explanation about things. So they're available here on our website. So grab them from there. And what else was I going to say? Okay. Do we have to update this any further, Eusebio?
No, not for the moment.
Okay, not even with Turkey?
No.
Right. Okay, so I guess that takes care of the NewsWatch.